You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose. Welcome to Masters in Trading Live. Masters in Trading Live, I get on here every day the market's open, 11 o'clock a.m. Eastern Time. Go over the market, share my thoughts once in a while, or even share our trade of the day. Big news, U.S. Steel. Nobody wants this merger to go through. Apparently Biden is blocking the U.S. Steel merger. So as traders, U.S. Steel was supposedly being bought by Nippon. Is that how you say it? Nippon? And they blocked the merger. So US Steel was trading 40, comes back to trading 29. What can traders do? What do you do when you see that kind of information? Well, the number one thing I do is look at the sector. Don't just look at US Steel. If US Steel is going to lose 25% or 30% of its value overnight because they're not going to allow this merger to go through, what's happening to the rest of the industry? So in this presentation, we'll go over the market first. We'll talk about the NASDAQ. And then I want to talk about US Steel, talk about how our unusual option activity tool was showing advanced notice of this potential big move in X. And then I want to look at some correlations. Let's go to the slide deck. Let's see what we got. Inventory. What is inventory? What is inventory in trading? Well, inventory is your positions, your open positions. I like to consider that your inventory. I like to consider that your inventory because inventory should always be in motion. We don't want to just sit on our inventory. So if we're calling our open positions our inventory, that's what we want to keep in motion. I'll expand on that. Top story. Biden preparing to block Nippon Steel. Biden to block. U.S. Steel shares plunge on report from White House. Exclusive. U.S. warm Nippon its U.S. Steel bid poses a national security. So they do not want this deal going through. So what ends up happening to X? Well, before we show you what happens to X, here is our advanced notice tool. Our advanced notice tool, September 4th, yesterday, Steel was seeing the most amount of unusual option activity. But if we look under the hood, because every day our advanced notice tool, which is right here, advanced notice, it updates throughout the day. Every day it shares the most unusual trades. Well, if we look under the hood, and by looking under the hood, I'm going to go back and look at, say, I don't know, like 15 trading days. Look at X. X keeps popping up. Keeps popping up on this unusual list. Now, I didn't catch this trade. But those who are following our advanced notice tool, you absolutely could see a trend coming with X before this really, really big, powerful move. Let me make this smaller because I want to pull up some charts so we can make this a little bit more interactive as we go through these potential trades. Let me organize this here. Okay, so whenever we see big news, guys, we see big news, we want to look at divergences. We want to look at relative value. So steel, ticker symbol X. What are the other major U.S. steel producers? There you go. NUE, STLD, CLF. So when we're looking at this gargantuan sell-off in X, what are these dudes doing? Because it's the industry, right? It's one industry. So that's when we want to pull up some charts and we want to look at relative relationship between the industry. And that's what I'm going to do right here. So now, what do we got here? We have NUE against STLD, CLF, and X, the 4 US steelmakers. I have a 100 period moving average on that. I am not showing that. So you can just see show study. That is off. So we're going to look at the relative value on a weekly going back 5 years of the steel companies. 5 years weekly. Now, what do we see? Well, overall, they're all staying together, right? Cliff gets over its skis. Look, in 2021, right here, and this is a weekly. All these are all opportunities for trades. This is CLF getting expensive relative to the sector. This is so powerful. Look at this CLF, guys. It is such a powerful way to look at the market. And if I just simplify this by taking one of them out, CLF is the purple, or this fuchsia, mauve. Expensive, expensive. Look, here it gets inexpensive. Here it gets inexpensive relative to the other two. So by looking at things as a divergence, the really, really big benefit for traders is it takes out the guesswork. Okay? When I teach, I want people just to look at the lines. Like, what do these companies do? I kind of want you to put that aside and look at it as the industry and the correlation from the industry. So the big takeaway for me was X. X wasn't, if anything, the deal price was expensive. It was running expensive relative to the rest of the sector. As soon as the deal falls apart, look at X, comes crashing down right in line with the others. So if anything, if the steel industry recovers, which it will, potentially Cliff might be a good play to get long. So really, really cool way of looking at the market. I just took out this one just to simplify things, but this is the way that we trade. Weekly, if I put it on a daily, we could start drilling into more recent data. So this is 2 years, looking at a daily. And whenever I'm doing this kind of analysis, guys, I always start from the same point. So it's on your mark, get set, go. And so they all start 2 years, or we can do it 1 year. 1 year, okay. And the way that I do this in Thinkorswim or in any of your platform that you're using, you want to make sure that you're showing the price as a percentage. When you show the price as a percentage, you can look at them relative to one another, right? So you can go back 1 year and look at the relative performance. And even though X gets absolutely expensive relative to the others because it was a potential buyout, look at once the others started to sell off. It's almost like they all caught up based upon the news, but once they all started to weaken up, that's when X really, really weakened and sold off. So just a cool analysis. I'm not sure there's really a great trade here, but whenever you see big news like that, absolutely the play is go look for your divergences. A really, really great comment from Jerry. And Jerry, I just want to thank you for sharing this. Jerry just sold a strangle. And he sold a strangle. We have a trade in AI. And AI has earnings today, and it's down 20%. And so this trade, the 30s and the 27 halves, a lot of people had the 25s as well. The 30s and the 27 halves, your calls and puts. Right now, the stock is trading 19. So if you're going to buy a strangle, your risk is the total risk of the trade. And so what I'm explaining to Jerry here is he's able to cover the strangle for 280%. Or excuse me, he was able to cover the puts for 280%, but it's the overall trade that matters. Whenever you do a trade with two sides, don't just look at the return of one side. The return that's important is the 52%, because you have one trade when you're doing a strangle, a straddle, or any other kind of option type of spread. And here is what AI looks like. Very, very volatile trade. And what we did, not sure, it was actually more bullish than bearish, but sometimes the ball bounces your way and the thing moved enough that we were still able to lock in some money on the downside. But we would have done way, way better if we're able to trade from the long side. Tomorrow, non-farm payroll. Tomorrow we will move. The market is trying to sell off. I just feel it just doesn't feel that weak to me right now. If we look at our actually it does. Actually, it does. I'm going to go back to the screen. I just want to show you what I'm talking about. These vol indices have not come off at all. Okay, there is major, 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 major risk in this market. I was just about to tell you that let's wait for non-farm payroll to see which way that this thing's going to move. But there is so much risk in this market. I don't like the VIX term structure all over 20. There's a ton of risk in this market. You do not want to be long going into non-farm payroll. Okay? Be very, very careful. We need to see these vol indices sell off considerably for this market to rally. I am very, very concerned with those VIXs going into NFP with such elevated risk right now at 20. So be careful. Protect yourself on the downside. It's risky. Okay? Any other questions, guys? You can leave them behind the YouTube channel or send a note in. Hope everybody's great. I'll be live tomorrow, 11 a.m. Eastern Time. Thanks for watching. All access. You guys don't go anywhere. We'll be right back.